Welcome back to the Noble Gold Investment Inflation Series. Now, let's answer the question, is there ever a time when inflation is good? If you have assets that generally go up in price over time, like stocks or real estate, you may benefit from inflation and sell all those assets at a higher price. This is why many economists actually like inflation, but only when it occurs at a low, steady rate. They say that it is a sign of a healthy economy. How? They say that goods and services are being produced at a growing rate. Consumers are also buying them in increasing amounts. Our government actually targets a 2% inflation rate. For a really long time, they were able to achieve this using the manipulated CPI. Another thing to factor is spending. They say reasonable inflation promotes spending instead of saving. If the purchasing power of money fails and falls over time, then there may be a greater incentive to spend now instead of saving and spending later. When people spend, the economy is stimulated. Confidence goes up and money actually goes around. When inflation starts mounting higher than 2% or changes quickly, it can become a problem. It's a problem because it interferes with how the economy works as currency loses value too quickly and the cost of goods skyrocket. Wages can't keep up, so people stop buying. Production then stops or slows, and the economy can tumble into recession. The government, and they're doing this right now, they try to control inflation. The Fed implements our monetary policy. The Fed targets moderate long-term interest rates, price stability, and maximum employment. Each of these goals is intended to promote a stable financial environment. Now, the Fed tries to keep the prices of goods stable. This would allow businesses to plan for growth, expenses, expansion, and others. The Fed believes that this will promote maximum employment. They also try to control the supply of money. The Fed can't just print money to pay off our debts because they know that will devalue the dollar even more. And this has resulted in a very devalued dollar. During economic distress, the Fed is also known for taking some extreme measures to keep the economy stimulated. During the pandemic, the U.S. Fed has kept their interest rates near zero and pursued a bond buying program called quantitative easing. Of course, there's always the other side. This is for our U.S. dollar to increase in value. If this happens, we don't need more money to buy more. We would automatically be able to afford everything with the same income. So, now that we understand the pros and cons of inflation, let's get to the best part. How do we actually hedge ourselves against inflation?